Today, Bitcoin hovers above $100,000 to end the week. Pro-crypto Congressman French Hill is picked to lead the House Financial Services Committee. And Mathew McDermott, head of digital assets strategy at Goldman Sachs, lays out the bank's crypto plans in 2025. As of noon Eastern, Bitcoin lost 0.5%, trading just under the $101,000 mark. Ether also fell around 0.5% to $3,912, and Solana dropped 4.25% to $221. Bitcoin battled with the $100,000 mark over the past week, and as of noon, only slipped 0.75% since last Friday. That's in line with the broader U.S. markets. Meanwhile, Ether fell 3.7%, and Solana dropped more than 7%. Okay, let's talk about the top stories for today. Congressman French Hill has been tapped as the new White House Financial Services Committee chair come 2025. Now, Congressman Hill has been a proponent of crypto and joined CNBC's Squawk Box this morning, where he pushed for crypto regulation.
We need a market structure for digital assets. We don't have rules of the road. Under Chairman Gensler, we had just regulation by enforcement. This is not helping America succeed, not helping technological advance, innovation for Web3, the use of blockchain, both in publicly traded companies and in financial services. So that is the top priority for us. And our majority leader, Steve Scalise, has it on his first 100 days of the House is to move a regulatory structure bill for digital assets. And I also believe a dollar-backed payment stable coin for under U.S. law as well.
Hill replaces Patrick McHenry, another pro-crypto lawmaker who had drafted multiple crypto regulation bills. Congressman Hill said in a statement that he looked forward to working with House and Senate Republicans, along with President-elect Trump, to, quote, bring common-sense economic policies that will produce a new era of American prosperity, shared by all our citizens across our land. Next, Senator Bill Hagerty reacted to President-elect Trump's crypto comments to CNBC yesterday. The Tennessee Republican senator joined CNBC's The Exchange Thursday afternoon, affirming the need for American competitiveness in the space, which he believes has been stifled under the current administration.
We want to be at the cutting edge of innovation here. If you look at the Biden administration, at this SEC, you look at the regulatory onslaught that they've had to deal with, the fact that they're using, the legal framework that they are, or the lack of a legal framework, I should say, to just come in and regulate this industry by litigation. What we're going to look for is a great opportunity for crypto to expand here, again, putting the United States at the cutting edge of the innovation.
The same day Hagerty made those comments, President-elect Trump rang the opening bell at the New York Stock Exchange. Plus, he reasserted his commitment to crypto in a conversation with CNBC's Jim Cramer, saying the U.S. wants to be ahead of competitors in the space. All right, let's get to our main story. Crypto World's Mackenzie Sigalos caught up with Mathew McDermott, head of digital assets strategy at Goldman Sachs. The company recently announced it was spinning off its digital assets platform, so she asked him about that planned split and got his take on the crypto trends Goldman expects to prioritize in 2025.
It's been such a fascinating year for the crypto industry, in large part because of the launch of these spot Bitcoin ETFs in January. Now, The most recent read for Goldman, those 13F filings, showed that you have roughly $718 million worth of those spot ETFs on your books. Now, at this point, a lot of people are saying there's so much pent-up demand. At this point, it's just your wealth management clients asking to have exposure to the product. And so a couple questions out of this. One, are you close to completing your in-house due diligence so that you can have your FAs actively start pitching out these products?
At the moment, we're just focused on institutional activity. Mm-hmm. So, I mean, to the point that you make, we do obviously have balances on balance sheet, but that's a byproduct of facilitating client kind of demand in the market.
When I talk to institutions, overwhelmingly, the people are enthusiastic and have already baked in a repeal of this niche accounting bulletin, SAB 121, that's made it so difficult for banks to hold Bitcoin and other cryptocurrencies on their balance sheet. They'd have to treat it as a liability. Yeah. Now people have assumed that that's gone. Under this new SEC regime that will, take effect in January, like Chair Gensler, of course, has already said that he's stepping down. This will no longer be an issue. Are you having conversations about whether that might impact Goldman Sachs' strategy on Bitcoin?
Yeah, I mean, it's no longer gone, but I mean, I guess we've seen exemptions and, a lot have been obviously publicised in the market. I do think it's probably, a good kind of trend in terms of people who want to get active in this space in terms of the impact. So, yeah, we'll wait and see what happens, but yeah.
More more broadly speaking, I feel like U.S. spot Bitcoin ETFs were stage one. And yes, there are other altcoins that have applications in the pipeline, but it seems overwhelmingly that the focus has shifted toward the derivatives market. You see options now trading on the NYSE and NASDAQ. Talk to me about what your thoughts are about building out a more robust market infrastructure around these more traditional wrappers for these crypto products.
And I think it's a really good point, because I think we've talked a little bit about the institutionalization, or certainly more institutions kind of coming into the kind of crypto marketplace, and that I think really does kind of highlight that. You've seen the ETF, as you say, over 100 billion. You've now got kind of options that are trading obviously on the back of this ETFs, and I think that's, as we start to look at other asset classes, it's no different to them. All you're doing is kind of broadening the product suite to actually kind of enable more market participants to become more active. So it's a trend that we definitely expect to continue.
And another corner of your business, of course, is tokenization. And I feel like in 2023, when things were more quiet in terms of price movements and the crypto price charts, a lot of people were focused on what tokenization could mean for institutional adoption of this tech. So whether it was tokenizing money market funds or other forms of real-world assets that banks were adopting. Talk to me about Goldman's strategy. And then, of course, the potential spin-off of GSDApp as well.
Yeah, look, again, a good question. And as we have spent a lot of time, and to be honest, one of the foundational parts of the business is seeing how the technology can transform the way the financial marketplace operates. We have, through client demand, certainly on the tokenization side, embarked on a number of different kind of initiatives that, will go to market. Some have come, some will come to market next year. And, as a byproduct of that, we have built out a digital asset platform. And so that was something that we really kind of was conceived in 2021. We went live in 2022. And as I've philosophically thought about this, to me, to have a properly decentralized marketplace that really kind of invites, kind of the ability to create a market with liquidity and real depth, I think a kind of more kind of mutualized standard market platform feels the right way to go. And so one of the reasons we did make that announcement was because as I say, we deliver a lot of these projects onto the platform, people are very well aware of kind of the intention of what we're looking to do. And then, as a kind of byproduct of that as well, when we look at kind of collateral mobility, we call it, but it's looking at the repo, the securities finance, derivatives market, the technology there is already ready. We're starting to see examples where you can really transform and actually enhance value for the broader market for intraday, for example. And so, to me, one of the things I really expect and hope to see next year is continued scaling in that space as the commercial drivers become more obvious.
And what was the thought process behind deciding to potentially spin off GSDApp instead of continue to incubate it within this digital assets division at Goldman?
I think for us, and still obviously it's subject to regulatory approval, but for us, I think it is that we want to have an industry solution. I think interoperability, is something that's talked about an awful lot. And if you really do want to have a decentralized platform, I think it's much better serviced, if it's owned by the industry. And therefore you really can kind of coalesce. And so the ability to work with, strategic partners like Tradeweb, who we announced when we just recently publicized this, really does enhance the value proposition of the platform. Mm-hmm. So, we are working with a number of others and we expect that trend to continue.
And you mentioned this summer that 3 tokenization projects would be announced by the end of the year, new partnerships. Is there anything that you can speak to on that front?
Yeah, we've done a couple, and there's probably some of this stuff takes a little longer than anticipated, so there'll be stuff coming in the new year.
Which one this year would you like to draw attention to?
So we've been involved actually in the ECB trials, and I think, as you think about institutionalization more broadly of the market, regulatory clarity is the key thing. And so having this ability to kind of work with the ECB within their trials, and we did recently execute an issuance for EIB, so the European Investment Bank, and again, just showcasing some of the benefits of the technology. It's settled within a minute. We're also involved in a intraday repo transaction within the ECB trials, again, showcasing how the value proposition for banks like us can, really be kind of commercialized at scale. And so as we look forward, there's other kind of different products that we're looking to tokenize.
Regulatory clarity is the catchphrase of the of the season, at least
is
here
indeed.
in the U.S.
Yeah.
I mean, you're speaking to what you've been doing with Europeans. Of course, they rolled out MiCA over a year ago. In the U.S., there have been many bills that have been brought to Capitol Hill. None have passed through. And I'm not asking you to comment necessarily on the politics, but what does regulatory clarity look like to you? Is it getting hard and fast law on crypto market infrastructure here in the U.S.? Is it a repeal of SAB 121 at the SEC? Is it a combination thereof? Is it stablecoin legislation?
I think it's just that. I think it's, good one. I mean, the latter one's a really good point. So getting clarity and a clear regulatory kind of stablecoins is much needed. And that's something I would fully expect next year. And I think just having that clarity is kind of key, because that's why I think you've seen an increased velocity of institutions really kind of step in, and they acknowledge now that they can see the forward, and so they're more comfortable committing and investing in their teams.
One criticism I've heard of stablecoins, because there are plenty of positive things in terms of how it's streamlining international payments and the way that businesses are moving money. I mean, Stripe paying $1.1 billion for a stablecoin infrastructure company. But my question is that so many of these stablecoins are built on different blockchains and they're not interoperable. So are there solutions and conversations happening about that in your team, how you streamline that?
I think for us, I mean, we do, spend a lot of time thinking about digital money. Stablecoins for institutions, point in time, kind of are quite difficult to really scale because of the capital footprint. And so we've been a little bit more focused probably on kind of central bank solutions in the digital money space. But interoperability, going back to my point, I mean, that's a kind of key thing. And I think stablecoins, if you kind of just look at them, they are, and people talk about them as a killer app. Mm-hmm. This ability to move money, internet speed at zero cost, hugely powerful. But interoperability and scale is obviously key. And for institutions, capital efficiency obviously is another key ingredient.
In terms of 2025, a lot of people are talking about market outlook with respect to prices, but also just in your strategy, whether it's more of a focus on tokenization efforts or on other ends of your digital asset business. Where are you placing your priorities, and where do you see the market going?
Yeah, I guess for us, very high level, I think kind of continue to scale the tokenization initiatives that we've talked about. Also kind of scaling again of the collateral mobility, because that's, where the market can really extract a lot of value, and we're seeing more and more kind of appetite and interest there. On the crypto kind of side, I think for us, it's really continuing to broaden the product offering within the regulatory bounds, as well as geographically making sure we're well positioned, to kind of deliver for our clients. We have seen an increased velocity, kind of across, I guess, the classic kind of banking, kind of M&A, I suppose, financings. And as the market, a lot of these kind of companies now are looking to kind of raise more money, there is more expensive liquidity. So some are looking at IPOs and other forms of financing. So, as we've seen announcements from some companies across the market, so I expect that's something that we'll see as a trend. And then for us, digital money, really focused on, solutions that we can scale.
Okay, that's all for Crypto World this week.